LGFV is a funding platform for a lot of regional local government, because the fiscal system in China, in the way that the local government want a balanced budget, insufficient, the central government will give you a transfer payment. But then the local government responsible for a lot of infrastructure investment. So in the last decade, they used a lot of LGFV to raise the funding. I think that the issue is with the distress in the property sector. They're all interconnected, as Tomo-san also mentioned. The fiscal, the land sale revenue of a local government certainly declines significantly, which is also a cause of concern, because the faith of the survival of the LGFV is really rely heavily upon the payment from the government. I think this is that's why you see in the last 12 months there's a quite a differentiation, particularly onshore market. Those in the weaker region, Yunnan, Guizhou, you see the LGFV basically cannot issue in the onshore bond, or the credit spread widen significantly, which causing some, I think, risk of aversion sentiment in the onshore market. Recently, all talking about the central government now want to launch a debt swap program, 1 to 1 trillion, 1.5 trillion. Probably we don't have all the detailed figure, but allocate to those region or local government that they need for refinancing. What we see is it helps, but it's not going to resolve the long-term issue of LGFV sector, because the end of the day, the LGFV is too heavily leveraged, and they do not have a viable business model to generate sufficient cash flow to repay their debt, rely upon the regional local government. Now with the distressed property sector, with the decline in land sale, where they get the money. Certainly, I think the central government measure at the moment, it help in the short term to restore the confidence, enable the LGFV continue to refinance their debt, or help to repay some of the debt, or bring it onto the balance sheet of the regional local government. But we're talking about this crystallization on contingent liability. What we see potentially is so-called the burden sharing, which the banking system may need to take up some of the burden. The regional local government may need to take up some. The central government may need to share a little bit. But the longer term, I think, to resolve the LGFV high debt issue problem is we talk about potential business transition of some of LGFV with some asset injection, or develop some more commercially viable business, so that can generate the cash, the earnings to repay the high debt level. At the same time, as far as the central government or the local government maintain the market confidence, they're able to refinance that debt so that they can buy the time, eventually, I think, to repay the high debt level. But what we see is still a sector with a high level of support, of a government support will build into the system. That's why we use a top-down approach. At the same time, what we see is clearly a big differentiation between those very strong evidence regional local government versus those very weak ones.